Good afternoon, hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and wishing you all the viewers the best of festivities. And looks like it's the third straight day of gains for the Nifty, and the festive cheer has gotten amplified because if you look at both the frontline indices, they're off its day's low levels as well. If you look at Sensex, it's up about by 500 points, and Nifty is also above that 25,700 mark. So we did slip below that 25,700, but then we are back above that 25,700 mark as of now. Sectorally, it has been the day for the Bank Nifty index because Bank Nifty index hit an all-time high ahead of some September quarter results, which will be expected from some banking heavyweights. For instance, we have HDFC Bank and ICICI Bank, which will be coming out with its Q2 performance tomorrow. Other than that, if you look at Nifty Auto Index, that has also done well with about 0.5% gains coming in from there as well. If you look at Nifty Pharma Index, showcasing a gain of about 0.3%. On the other hand, if you look at the Nifty FMCG Index, it's up and about for the third consecutive session, and 1.5% gains coming in from there as well from the FMCG basket. On the other hand, if you look at Nifty Realty Index, that is doing well with about 0.1% decline. 0.1% gains. On the other hand, if you look at the broader end of the markets, mid-cap and small-cap indices, both of them have been doing quite well. However, they have been underperforming the benchmark indices as of now. Mid-cap and small-cap indices, both of them, if you look at mid-cap particularly, that is showcasing a decline of about 0.5% itself. But yes, all in all, the sentiment of the markets remains quite upbeat, and like I was mentioning, it is the third straight day gains for the benchmark indices. Now let's take a look at some of the top gainers and losers on the Nifty 50 as well. If you look at the top gainers, Asian Paints doing well with about 4% gains, where the company has reiterated that the second half of the fiscal year would be better than the first half, and of course the results reaction has also been trickling in. Because of that, we can see 4% gains coming in for the counter. Bharti Airtel also doing well with about 3% gains, Max Healthcare, M&M, some of the other gainers on the Nifty 50. However, on the losing end, if you look at Wipro, some of the IT stocks have taken a backseat today. So as a result of that, you can see Wipro, Infosys seeing a cut of about 2 to 5% each. On the other hand, if you look at HCL Tech, that is also seeing a bit of a cool off, 1.5% cut coming in from there as well. Eternal also seeing a cut of about 2% on the reaction of its September quarter results. But to understand how the last minutes of the trade looks like, and the way ahead, I'll go across to Milan Vaishnav, founder and technical analyst of ChartWizard. Milan, Nifty is up for this third consecutive session and above that 25,700 mark. What lies next?
Well, good afternoon, Lovisha, and I wish everyone here a very happy festive times ahead. That being said, markets are, of course, signaling some cheer. There are both good as well as some bad news. Good news is that finally we have broken out from that large year-long symmetrical triangle that was there on the higher time frame charts as well. Excuse me. And in the process now, since Nifty has finally broken out of this and has continued its logical move higher, we have now increased possibilities of the Nifty touching its prior highs. That is point one. Point number two, that while the index has broken out, we have seen that now the supports that were there at the lower levels have been dragged higher to around 25,400. That means that even if there are some minor retracements, so long as Nifty stays about 25,300 to 400 zone, the attempted breakout would still remain valid. Now comes the little skeptical part of the story, is that today we have seen a very weak market breadth. With the kind of markets that are gaining today, we are still sitting at 1:1.5 kind of a market breadth in the favor of decline. So that is something I am a little skeptical of. That may lead to some minor consolidation or even minor retracement. That is third point. Number four, importantly, we have VIX that has shot up again by another 7%. So now I think even while the breakout remains very much in place, very much valid, I mean, we still need to guard our gains at these levels and be highly stock selective as we approach the markets over the coming days.
Okay. But Milan, today's the milestone that came in for the markets, that was from your Bank Nifty index, because it's hit a record high levels, and we also have some big heavyweights which will be reporting its Q2 performance. But what are the next levels that you're watching out from the index, and of course, what are you liking from this space also?
It would not be a surprise if Nifty Bank continues with its relative outperformance going ahead from year point one. Looking at the high levels, yes, I expect some more room left on the upside. Some consolidation is likely, but still there is meaningful room on the upside for Nifty Bank. Especially, it is likely to come from ICICI and HDFC Bank. ICICI has got room on the upside, whereas while some consolidation cannot be ruled out, I also see HDFC Bank breaking to a new high. So that might support a Nifty Bank going on from here.
Okay, okay. But then while Bank Nifty did well, it was the IT index which was one of the top underperformers of the day also. But yes, how are you finding the index, and can we expect more downside in the upcoming days?
I don't expect much of downside on IT pack. There are two sectors that I have identified which both qualify for a kind of portfolio inclusion. And one of them is the IT pack because IT has not violated its most recent swing low that it has formed or at at Nifty IT index level. And that level has coincided with the 200-week moving average, and that level has been respected multiple times during this year. So it has as far maintained the credibility as a major support, and it's in a very long drawn bottoming out process. And I see that in event of anything happening in the markets, I'll see very gradual, very slow, but constant improvement in the relative performance of IT index. That is one point. Another thing that I would like to add here is that one must also keep an eye on realty space. It is in a serious bottoming out process, and it's at the farthest distance from the center point when plotted on relative rotation graph. So it has got much more capacity left to generate alpha against the broader markets. So yes, I don't see any major retracement coming there as well.
Okay, okay. No major retracement from IT, but you mentioned about Nifty Realty Index. Of course, this week we have seen good traction for the realty basket, but how much more of an upside are you watching out from a technical perspective?
I see major upsides coming in realty. Point one, as I just said, right now on relative rotation graph, it lies in the lagging quadrant. That means that by default, generally something which is in the lagging quadrant is expected to underperform. But realty in particular is showing very sharp improvement in its relative momentum against the broader Nifty 500 index. So I believe that it's in the bottoming out process, and in fact, once it is above 950 levels at index level, it will in fact enter or rather signal a beginning of phase of its relative outperformance. So I think realty space has got a long way to go from here.
Okay, all right. Longs, anything that you're liking from the space, realty basket?
Yes, I would stick to Godrej Properties, and I would bottom pick Lodha.
Okay, all right. Godrej Property is one of your top picks. All right, let's move on and talk about some of the individual movers today. We'll talk about the first Nifty loser, that is your Eternal. The stock initially did spike after the company saw some strong revenue growth from the quick commerce business. However, gains quickly faded when the management also indicated that the growth in the food delivery segment is expected to remain quite slow in the near term. But on the consensus for the street, that still remains a buy on the counter because they still believe on a strong long-term growth trajectory for Zomato as well. Milan, what do you believe? I mean, for the near-term investors, it's definitely a pain point, what the management has indicated. But would you say that this dip is a time to buy?
I won't jump into this for a couple of reasons. The first being that if whatever the management might have seen, but if you look at this from a technical lens, then the last phase of up move, the last incremental highs that the stock formed, has come with a negative divergence on the lead indicator. So that was a signal enough that the stock is losing internal strength. And with the stock coming off from yesterday's high point of around 365, 368 odd levels, I think a temporary top has been put in place in Eternal. So maybe if anyone is looking to enter into the stock, either they should wait for the new high or wait for lower levels. But this certainly would not be the good entry timing for Eternal.
Okay, not a good entry time for Eternal. Of course, the stock has been cooling off after 2 days. It hit its 52-week high levels as well. All right, let's move on and talk about Asian Paints also, because the stock has been one of the top Nifty movers of the day, and the stock has witnessed the biggest single day gain since March this year as well. Now, the rally was driven by a combination of factors. First, we did see that the oil prices have dropped after US President said that he will be meeting Russian President in Hungary to discuss ending the war in Ukraine. And then we also had the management, which also indicated that the second half would be quite better than what the first half has indicated. But Milan, what's your view on the counter? Good breakout, 4% gains coming in for the counter.
Well, breakout, it's yet to happen. That would happen only after the stock goes above 2600 meaningfully. That is point one. But if you zoom out a bit and take a little holistic view on the charts, the stock stopped declining somewhere in between March and April of this year. And since then, until now, it has been under a very well-defined sideways movement where it has spent a good amount of time forming a base for itself. So now it's trying very hard to structure a long-term trend reversal, and that could get confirmed. That could get confirmed once the stock goes above 2600.
Okay, all right. 2600 is one of the key target levels that we'll be watching out
Yes.
for. But okay, all right. Let's move on and talk about some of the IT counters. We'll first touch base about Infosys. The stock has dropped about 2%, and the company did report better than expected September quarter earnings, and even brokerages gave out a buy call on the counter, but the company did narrow its FY26 revenue growth guidance to about 2 to 3% in constant currency terms. However, it maintained its operating margin band at about 20 to 22%. Infosys, Milan, how does the counter look like on the charts? One of the top Nifty losers today.
Yeah, a bit weakish, I would call it, because right now it has tested its long-term trend line, which is between 1400 and 1420 for a couple of times. And even right now, it is just clinging onto it and it's trying hard to stay above that. So I think it's a bit weakish on the chart. A good amount of trending move on the upside would come only after the stock goes above, say, around 1480 or 1490 odd levels. Until then, we need to keep a close eye on 1400 levels for Infosys, because if that level is violated, then we might see the stock staying weak for some time.
Okay, sometime is going to be weak for Infosys. Let's take stock of Wipro also, another IT counter, that because that stock has seen a sharp fall, 5% downtick coming in for the counter after the company reported a mixed set of Q2 performance. We did see revenue and margins came in line with what the street was estimating, but profit has fallen short of street estimates. What Motilal Oswal is saying is that Wipro's revenue and margin performance were in line with expectations, but the revenue acceleration remains quite elusive despite the sustained momentum, and that is the reason why they have given a sell rating on the counter. Wipro, any levels you need to watch here, Milan?
Yes, see, Wipro, something strange about Wipro is that since last many months, in fact, the stock has completely stayed devoid of any sustainable directional bias. It's been moving up and down, has stayed within a very wide but very well-defined range, but it hasn't shown any kind of strong triggers either to go long or short on that. Right now, the things remain the same, and I would eye 235 levels as my final, level that would defend the stock, or rather, lend some support. But if 230, 235 zone is taken out on the downside, then, well, yes, the counter may get sold into a bit more. I mean, there are no triggers to do anything on Wipro as of now. As an investor, one must completely stay away. And for those who are already invested in it, 230 should be their final stop loss. If that is violated, then one has to move out from that.
Okay, 230 is the next stop loss that we can watch out for Wipro. And today also the stock is seeing a very sharp fall, 5% downtick coming in for the counter. But yes, let's move on and talk about LTIMindtree, because that stock has been flat in the trade. The company has reported revenue and margin which has exceeded the market expectations, with signaling a potential turnaround after multiple quarters of an uneven performance. But in the past 1 month, the stock has been up by about 4%. Milan, is it still better than the peers?
Yeah, it is. In fact, one of the good charts from the broader IT space. I must say, and it has, I mean, shown an attempt to break out after as it moved past 5,500 levels. So it has attempted to break out. It might be a little bit on the verge of getting, overbought. It is not yet overbought, but yes, it certainly has got some good room on the upside. One can expect 6,000, 6,100 on it. And in the process, the support levels have also been dragged higher to 5450, 5500 or zone. But yes, it is one of the good looking charts from the broader IT space.
Okay. Good charts from broader rally space. All right, let's shift and talk about PVR Inox, because the stock is off its day's high level, 2% from its day's high level as of now, after the company reported a good set of September quarter performance, where they have swung to a net profit for the September quarter compared to a loss in the year ago period. Now, the revenue has also risen by about 12.4% on a year-on-year basis. Operating margins have expanded. There is a reflecting the improved occupancy and higher ad income, and some disciplined cost management also for the company. But PVR Inox, Milan, how does the stock look like? I mean, if you look at the longer term chart horizon, then we have seen that the stock has broken below that 1600 odd levels, and it has been stuck quite in a range in the past few couple of months.
To be frank, there's nothing in PVR Inox that one needs to act upon. I mean, for the investors who are already invested, I don't see them getting any major price appreciation. As such, the media index itself is not that much in good shape. It's been relatively underperforming. A day or two of outperformance and then series of relative underperformances from this space. Be it PVR Inox, be it Sun TV, be it Z Entertainment, nothing from this space as such is worth it is worth looking at, because it's likely to cost an opportunity cost for the investors who stay invested here. So far as PVR Inox is concerned, I mean, so as long as it's trading above 1025, well and fine, one can stay invested. But otherwise, I don't see much of the upsides coming in. It's just likely to stay in a broad range, be somewhat here, be somewhat there, but not do much on it in at least foreseeable short term.
Okay, all right. PVR Inox, that is a stock we need to watch out for. And of course, you're quite bearish on majority of the media counters. All right, with that note, let's quickly move on to our next stock of the day. That is your Hindustan Zinc. The stock is not doing well today after the company has, they expect lower production for its refined metal and saleable steel for the full year as well. The entire metal basket is down today, Milan, but what is your view on Hindustan Zinc? So far this year, the stock has been an outperformer.
Hindustan Zinc, I don't have a negative view on that. It's risen quite nicely from 445, 450 odd levels until the recent high of 520 that it saw on the charts. What we are seeing is some minor retracement from the highs. It's perfectly normal if that happens. You zoom out a bit and take a longer view on the chart. It's forming a massive rounding bottom formation. So it's certainly a good stock to hold for a long term. In the near term, there could be minor retracement, as I just said, but but the near term trend remains intact. And largely speaking, I also don't see any major strength coming in US dollars. So that is likely to, as such, act in favor of the commodities and the metal space as well. So by and large, it's a good stock to be held for a medium to long term prospect. There's nothing wrong with it structurally as of now.
Okay, all right. That is a stock we need to watch out for. Nothing structurally weak for Hindustan Zinc as well. All right, let's talk about Anupam Rasayan. The numbers were higher on a year-on-year basis, beat across a majority of the parameters, but the stock is not doing well in today's trading session. We did see that the revenue has risen to about 731 crore rupees. Profit numbers have stood by about 44 crore rupees, but the stock is down with about 4% cut. Milan, some profit booking given the stock has seen a strong run-up this Samwat.
Yes, it has indeed seen a stock run up. It's a classical case of a breakout from a Bollinger Band squeeze. It did nothing for months and then it has given a very nice rally. Now, as you very rightly said, this is time that one should be a little focused on taking off some money from this counter. So yes, some profit booking in Anupam Rasayan cannot be ruled out. And I think one should also opt for profit booking one can always re-enter the stock later, either at lower levels or when it starts rising again anytime. But yes, this is the time that we should take some money off the table from this counter.
All right, so some profit booking should be expected from Anupam Rasayan given the stellar upfront. But coming to another stock in focus, that is your defense stocks, because they have done well on the back of some heavy volumes. If you look at HAL, still in the green, Bharat Dynamics up about 2% as of now. But we did see that Hindustan Aeronautics announced its first LCA Tejas Mark being produced in the Nasik facility. And then we also had Apollo Microsystems, which secured a new order as well. But yes, Milan, how are you placed on the entire sector, and do you have any picks from here?
Yes, I have a pick. Let's talk about Hindustan Aeronautics first. I see that some amount of uptick is likely. The stock has resumed its up move after, crossing above its 100 DMA and staying about that for some time. It has now resumed its up move. One can expect 5100 to 5200 on Hindustan Aeronautics. So far as my pick is concerned from this space, that would be BEL, Bharat Electronics. I expect 425 to 430 rupees on the stock in the near term. That is one of my picks from this space.
Okay, all right. That is your pick from this space. Let's move on and talk about Whirlpool India, because that stock was in high demand today. 10% gains coming in for the counter after the company announced the execution of several key documents. Now, they have executed several key agreements after receiving approval from its audit committee and board of directors as well. Good gains today, Milan, and given the stock's underperformance so far this year, what can we expect next?
I can expect some amount of extended upticks in Whirlpool, but at the same point in time, I also don't see any major trend reversal taking place as long as it stays below 1400 rupees. So I think not even 1400, sorry, 1480. I would, if I'm making some money in this technical rebound, in this counter trend move, then I would very happily take profits into it. But I would more focus it as a delivery pick to be included in my portfolio only after it goes around above, say, 1500 odd rupees. So long as it's below 1500, I would just look it as a trading pick and take some money off the table if I'm getting some money out of it. That's it. But any major significant addition should be done only above 1500.
Okay, all right, just 1500. All right, just last 40 seconds to go before the close, but we'll discuss about one more stock, that is your Waaree Energies, given that the company did report a good performance in the Q2, 130% year-on-year uptick in net profit. Company's total income has also risen by about 70% on a year-on-year basis. But yes, Milan, how does the counter look like? It has been an outperformer so far this year, but today the stock is down.
Yeah, it is stable as such. If you analyze the overall trend, it is an uptrend and it has maintained its primary uptrend. There is no disruption as such. All the retracements have found support at its 50 DMA. So far, so good from a typical, a typical technical lens that we would look through. So its immediate support is at around 3300, and as long as it stays above 3300, it will remain in its primary upgrade. So I mean, absolutely good to stay invested in the counter, on the counter.
Okay, all right, good to invest it on the counter. Now let's see how the market is closed as of now. We have closed in the green, and so far this week also Nifty has surged nearly about 2%. Both the frontline indices have been on a strong footing because it is the third straight consecutive gains for the frontline indices as well. So yes, the festive cheer is on the Lal Street as of now. And you can see that Nifty has closed near that 25,700 levels as well. Nearly 0.4% gain coming in for the benchmark index, 100 points uptick for Nifty 50. On the other hand, if you look at Sensex, that has also surged with about 460 points. We did see that the day's high levels were higher, but it has closed with about 460 points as of now. Sectorally, it has been a good day. It has been a mixed performance for the entire basket because Nifty IT index did see some pressure on the back of Infosys and Wipro announcing its second quarter performance. Metal index saw a little bit of profit booking with about a 0.1%, nearly a percent decline coming in from there as well. If you look at the other baskets which did not do well today, that is your PSU banks, 0.6% decline coming in for there as well. Nifty Realty, after the sharp run-up it has seen so far this week, did see some profit booking towards the end, settled the day with about flat with a negative bias. On the other hand, if you look at Nifty Metals also and Nifty Media also, that is also not doing well in this market. But yes, what stood out was the Nifty FMCG pack, 1% gains coming in for the counter, and so far this week also the FMCG basket has done quite well. But yes, coming to the top gainers and losers, like I was mentioning, that stock-specific action will be continuing on the back of the September quarter results, and as a result of that, you can see Asian Paints doing well with about 4% gains coming in for the counter as well. On the other hand, if you look at the top losers, the stocks which have not done well, was not able to impress the street that much, has been punished by the street as well. Infosys, Wipro, both of them seeing a decline of about 5 to 2%. Eternal also seeing a cut of about 2% after the management did flag that the food delivery growth could be subdued in the near term. On the other hand, you can see HCL Tech seeing a cool off with about 1.5% declines coming in from there as well. Tata Steel also not doing well with about 1.5% cut coming in from there as well. But yes, coming back to you, Milan, FMCG basket that did quite well this week so far, and today also it is one of the top sectoral performers of the day. What are you liking from this space, and how do you think the index is poised for the near term?
FMCG space, from the index point of view, is in a sideways consolidation since April. I mean, almost since last, say, April through half of the October is gone. We have seen it trading back and forth in a very defined range. I think it is attempting to break out again, but it is not yet broken out. It is still in a range. From the space, I would prefer looking at Hindustan Unilever and ITC from this space. I'll prefer sticking with the frontliners, with the large caps, and not dig deeper into the mid cap space.
Okay, all right. Not dig deeper into the mid cap. So stick with the large caps. That's the view from FMCG. All right, Milan, let's move on and talk about this next stock in focus, that is your Natco Pharma, because the stock did settle flat with a positive bias after the Supreme Court dismissed a plea by Roche challenging the interim Delhi High Court order on the rollout of the generic version of Risdiplam. But so far this year, the stock didn't do well. But what lies next for Natco Pharma on the charts?
On the charts, there's nothing that lies ahead of Natco Pharma because it had once attempted to reverse the trend sometime between during the month of July, but it again resisted its major DMA. It came back. It now remains under a multi-month, declining trajectory. And whatever upsides that we are seeing are merely the counter trend up moves that are generally seen even when the stock is under a broad downtrend. So I would not pay much attention to Natco Pharma as long as it's below 940, 950 odd levels. It would attract my eye only after it goes above 950. But until that happens, well, I would just ignore and not do anything on the counter.
All right, 950 is the level that we need to watch out for the counter. All right, let's move on and talk about Ujjivan Small Finance Bank also settled flat in the trade today, but we did see also that the second quarter profit is nearly halved but has beaten the estimates. Shares have fallen, but so far this year the stock has done quite well. If you look at the YTD charts, 42% gains coming in for the counter. Milan, now what lies next? Today the stock did not do well after the profit nearly halved in the second quarter of financial year.
Well, Ujjivan, in fact, is one of the few, smaller financial services stocks that are looking good on the charts. It's been it has created a small concession zone between 48 and 48.75 odd levels, and I feel that once it goes above 49, it has got some meaningful room on the upside until say 51, 50 or 52 odd levels. So I think I expect some upsides in Ujjivan from current levels.
Okay, some upside could be visible from Ujjivan. But yes, Milan, just one last question before we let you go. I know we discussed a whole host of stocks as of now, but what are your top picks? And of course, any of the Diwali picks that you want to highlight here?
Diwali picks would be my two large caps. One can look at entering Bharti Airtel at current levels. And this is both of the things that I will talk about now would be purely delivery picks, no overnight gains or runaway kind of moves should be expected by the investor. But yes, Bharti is something I'm expecting as a Diwali pick. I expect some significant, meaningful alpha generating moves here over the next 1 year. It could be bought at the current price. I mean, whenever the markets open next. And other stock would be Reliance. Reliance, I expect the entire energy space to do well over the next 12 months. Reliance is one of them. It could also, I mean, you can discount short-term reactions to the numbers that the stock might give, but overall, yes, that remains my another Diwali pick.
Okay, all right. Those are the two stocks that we need to watch out for. But with that, we have to let you go, Milan. Thank you so much for joining us and wishing you a very happy Diwali.
Thank you so much, Lovisha. Thanks a lot. Wish you all the very same. Thank you.
Thank you. All right, let's take a quick check of the markets before we move on to our next segment. Of course, we did settle in the green. Of course, both the benchmark indices are on a strong footing. The stock-specific reaction will continue because we are deep into the earnings season. So far, we have had IT majors reporting their numbers. We have had Wipro, HCL Tech, Infosys, TCS, all of them reported a steady second quarter performance, better than what the street was estimating. But yes, the outlook still remains quite sketchy as we go into the second half of the financial year. And of course, the order book wins and the deal wins momentum, that is something that the investors will be watching out for. And of course, how the demand trends quickly pan out as well. But so far, it has been good for all the IT majors, given that they have reported numbers which was higher than what the street was estimating as of now. But yes, we will be having more earnings reaction, which will be coming out tomorrow as well. We have some banking heavyweights, which will be reporting its Q2 results tomorrow. HDFC Bank, ICICI Bank, which will be reporting its second quarter performance. Now, what the Moneycontrol poll has been estimating for HDFC Bank, they are expecting net interest income to rise very modestly by about 3% on a year-on-year basis, whereas net profit is expected to decline about 0.6% on a year-on-year basis. The majority of the brokerages are also expecting that the full impact of the June repo rate cut of about 100 basis points could be felt for the second quarter, and the margins could bottom from here on, and we could see some recovery from the third quarter onwards. But yes, from a asset quality perspective, the asset quality is expected to remain largely steady because we have analysts which have been estimating the gross NPA to remain at about 1.4% on a year-on-year basis, while net NPA could be slightly higher at about 0.5% on a year-on-year basis. But yes, margins, that is expected to contract by about 20 basis points on a year-on-year basis compared to last year because of the repo rate cuts that we have seen. On the other hand, in comparison, ICICI Bank, where we do understand the sectors that grabbed the headline in Samwat 2081, what the way forward looks like, and some of the top picks from the space. So introducing you to another edition of Fireworks and Fallout Themes. So in this edition of Fireworks and Fallout Themes, we will be putting the spotlight on the consumer discretionary space. And as we welcome a new Samwat, the festive cheer isn't just on the streets, it's showing up in the consumer spending and the sentiment patterns as well. Samwat 2081 did see travel, autos and fashion and retail driving the rally, while household appliances and white goods, that stayed subdued. But as we turn to the page to Samwat 2082, the setup looks quite promising because we've had government's GST rate cuts on key consumption categories, income tax relief in recent budget, and benign inflation, all which are poised to put more money in the hands of the consumers. But add to it, the RBI's expected rate easing cycle and the macro environment also seems ripe for a discretionary rebound. But the key question now remains is that will these tailwinds translate into a sustained earnings upcycle for the consumer-facing sectors? And which pockets of the discretionary spending are likely to benefit first? And what should investors watch out for in the September quarter results? Now, to decode all of these themes, triggers and stock ideas shaping the discretionary space, this Samwat, we're joined by Kruttika Prabhudesai, research analyst at Mirae Asset ShareKhan, who will be decoding us what it looks like. Kruttika, wishing you the best of festivities and a very happy Diwali.
Yes, wish you the same.
Kruttika, I'll start with my first question. If you look at Samwat 2081, experientials consumer spending, that has outperformed the durables. So explain us this divergence and what made them stand out.
So basically, yeah, in the previous Samwat, we have seen that experiential consumer spending has been way ahead of the durables part. So a few factors which can be attributed to this would be one would be the evolving consumer aspirations. So if we see the millennials and the Gen Z, they are more prioritizing experiences which will lead to social connection and lasting memory. So this is one factor. The other would be increasing spending on leisure, entertainment, and travel, which the people are mostly doing to compensate for the time they have lost during the pandemic, during which had a lot of restrictions on movement and travel. The next, the and one of the other factor is also the rising consumer discretionary income in the tier 2 and tier 3 cities, making activities such as vacations and online shopping more accessible and desirable. So overall, I feel few of these factors have led to a rise in the experiential consumer spending, and this theme is likely to continue going ahead as well.
Okay, all right. This theme will be continuing going ahead as well. Kruttika, then how should the investors approach the discretionary theme? Wait for the visibility post the second quarter results, or should they start accumulating as of now?
Right. So, in the consumer discretionary space, if we see overall, expectations of good recovery and the continued GDP growth, likely pick up in the earnings cycle are supportive for the discretionary sector. So, and it is continued to be performing well in the coming months. So here, I think there should be no this or that strategy, that one needs to follow. Investors can, adopt a combined of both the approaches. So wherein they can start investing a portion of their investment now and increase the allocation selectively after analyzing the Q2 results. So at present, investors can use market corrections to gradually accumulate positions in high quality discretionary stocks that have portfolio of good brands and strong balance sheets. And they can look for companies in subsectors which are showing sustained traction, such as travel, leisure, and other premium consumption areas. And after the results, once the results are over, once there is clarity, investors can gauge management commentary on demand trends and margin outlook for the second half, and invest in stocks which have a promising outlook. So, largely, this the decision should be on the basis of the investor's investment horizon and risk appetite.
Okay, all right. But Kruttika, which specific sub themes are you watching out as we enter the new Samvat?
I would likely, watch out for three large schemes, themes in the Samvat 2082. The first would be premiumization. So this theme has been going on for quite some time, and it is also expected to continue in the coming Samvat. So herein, mostly we see a structural shift where consumers are upgrading to high quality branded and premium products across various categories. The next will be a digital platform. So we have seen a quick and very fast growth in quick commerce platform, which are delivering grocery and other items, and these are likely to perform and continue the momentum going ahead as well. And the last would be the travel and leisure space, wherein, as I mentioned earlier, post the pandemic, normalcy and rising disposable income will lead to sustained upcycle in these areas. Strong performance is expected in hotels and QSR, and so overall premiumization, digital platform, and the hospitality space are the key themes to watch out for.
Okay, all right. Premiumization is something that you're watching out for next Samvat. But
Right.
there's going to be a certain demand slump in staples. That is what the management commentary has been indicating due to the GST destocking. So, how do you view
Right.
this theme of discretionary versus staples rotation in the upcoming quarters?
Okay, so in the very near term, if we say in the current quarter, the outlook for staples is slightly to be impacted due to the GST destocking and channel inventory rationalization. On the other hand, the discretionary companies are likely to benefit from the festive season and from the urban demand resilience. However, going ahead in the coming quarters, strong recovery is expected in the volume growth of staple companies, which will be largely aided by the lower GST, good monsoons, and rural revival. While the discretionary companies, they are expected to continue to perform well, supported by premiumization and a strong urban and middle class spending cycle. So overall, this is the outlook for the staples versus discretionary.
Okay, all right, all right. Let's also talk about travel theme because that has done well in this somewhat as well. But do we see better earnings visibility from here on? And can this theme also do well in the new somewhat?
So the travel is one theme, which has delivered good performance in the past year, and the strong momentum, is likely to continue in Sambat 2082 as well. So here we see a strong domestic demand, which is due to increased preference for leisure and experiential travel, followed by a favorable demand supply dynamic. So we have seen largely in the premium and the organized hotel segment, a supply growth is likely to lag the demand growth. So which is why it will lead to an increase in the room rates and also the occupancy, which will directly benefit the hotel companies' ARR revenue growth and the profitability. Also, the government initiatives and overall enhanced infrastructure is making more, tourist places accessible, and this will also support the travel and tourism and hotel companies going ahead. So overall, these all these factors point to better and sustainable earnings visibility for good hotel companies in the coming years as well.
Okay, all right. Now that we spoke about travel theme also, let's shift focus and talk about apparel and fashion retail because they are leveraging
Right.
more on the store expansion plans as well. So,
Right.
Kruttika, how are you placed on this theme and what would be your advice to investors to approach this space?
So, store expansion is, one strategy which is structurally positive for the apparel and fashion retailers.
Right.
So, largely this will be due to the, shift from unorganized to organized and lower market penetration in the tier two and tier three cities. So this theme is, continuing to benefit the fashion and apparel retailers in the long term as well. However, here investors need to be cautious regarding the growth. Regarding one thing, that the growth or store addition should not be at the cost of reduced profitability. So, investors should consider companies which are working on a model on profitable store rollout and with strong unit economics. So, if this is considered, then these companies which have strong store units will perform well going ahead as well.
Okay, all right, all right. Kruttika, but what are the three metrics that we should monitor from the September quarterly results that give an earliest read on sustainability for all the discretionary plays?
Right. So first would be, which is one of the key metrics that is observed or monitored, is the same store sales growth. So a consistent and a robust sales store sales growth will indicate that the company has strong customer demand and brand strength. So this confirms that the company can extract more value from its current asset base and not just from new store additions. So this is one of the very important metric that needs to be monitored in the current quarter earnings. And the next would be the inventory turnover ratio. So investors should look for high or improving inventory turnover ratio, which indicates that the company is effectively forecasting demand and selling products quickly, and this is a positive sign. And the last one is the gross margins. So these basically provide an insight into the company's pricing power and efficiency of its sourcing. So this monitoring this metric will help to confirm if the top line growth is translating into actual operational growth. So these would be the key metrics that investors need to track for during the Q2 earnings.
Okay, all right, all right. Also, Kritika, we are stepping into the new Samvat year. So, tell us some of the top names that you find attractive from the discretionary space.
Right. So, I have three names to list out here. Two largely from the hotel space, as mentioned earlier, that they have already given good performance and are likely to continue the momentum. The first would be Chalet Hotels. So basically, it currently has portfolio of around 11 hotels and 3,300 rooms with 2.4 million square feet commercial spaces. In this, the hospitality business is expected to perform strongly, led by acquisitions, inventory expansion, and better operational efficiency. And one of the key additional growth driver would be higher contribution from the commercial business. Management has guided for double-digit RevPAR growth in FY26, and it eyes over 5,000 rooms by the year end. So overall, we expect the consolidated revenue and PAT to grow at a CAGR of 25 and 35% during FY25 and 28. We have a buy on Chalet Hotel with a price target of 1,172. Next, we have Indian hotels that is one of the top picks for the coming summer. So over here, the company has a portfolio of around 392 hotels, including operational and pipeline hotels. And the management has guided for double-digit revenue growth guidance for FY26. And this will be supported by broad-based growth across all its segments and continued momentum in the meetings and MICE activity and high profile diplomat visits and accelerated growth openings. So multiple growth drivers here. And the company is focusing on strengthening its balance sheet by sustained reduction in the debt. And we expect revenues and PAT to clock around 14 and 22% CAGR over 25 to 27. We have a buy on Indian hotels with a price target of 891. Last would be Jubilant Foodworks, which currently has a network of around 3,400 stores across globally. And the company here is targeting multiple strategies for the delivery and the dine-in model to improve performance in the coming quarters. It continues to focus on network expansion, innovation, digitization, and operational excellence to drive revenue growth. And a rise in margins is likely to be driven by backward integration, focus on unit economics, better sourcing, and operating leverage. So overall, the long-term store expansion target is 5,000 outlets. So here we have again a positive view, buy rating on Jubilant Foodworks.
Okay, all right. Those are the three picks that we need to watch out for. But with that, we have to let you go, Kruttika. But thank you so much for your time in joining us and explaining us the discretionary space in so much of detail. And wishing you once
Yeah.
again a very happy Diwali.
Yes, wishing all viewers a very happy Diwali and best wishes for Samwat 2082. Thank you so much.
Thank you, Kruttika. All right, with that, we have come to an end of this edition of Closing Bell. We will be back on markets on Monday. Do have a happy weekend and wishing you all the viewers a very happy Diwali in advance. But before I let you go, introducing you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app and subscribe to Super Pro today itself.